dripping shimmer like a limited edition snowfall. Peppermint precision in my pivot got them starstruck when I roll through the hall. Holiday economics in my aura, I inflate the chill like I'm printing the mint. Free speech mid-sentence, staring stunned like velvet, really heaven sent. I got a slave made a stainless statement, stocking profits on the side rails. Bits and checks my temperature and says it's spiking past the North Pole scale. Mistletoe melts when I strut beneath it, can't handle all this caloric charisma. Snowflakes fall in Fibonacci spirals when they're trying to diagram my rhythm. Baby, December don't even start till I unlock it. Evergreen eagle wrapped in chrome. Yeah, I'm that toxic profit pocket rocket. It ain't Christmas if it ain't with velvet. Trees don't twinkle, bells don't ring. Snow won't settle without my presence felt. I'm the spark in the dark that ignites a whole sleigh bell. Yeah, the season malfunction unless I help it. Cause it ain't Christmas unless it's velvet. Yeah. With enchanted derivatives, candy cane cadence, so slick it turns cynics into festive primitives. I walk in and Santa starts sweating like, damn, how you out north on me again? Even Rudolph take notes on my glow, trying to re-angle the shine to win. I got reindeer negotiating bull race just to flex in my convoy. Elves draft wish lists asking for a piece of my voice like it's a luxury toy. Mrs. Claus sent a postcard saying velvet. Stage fright when I step out wearing velvet leather. If the wreath ain't spinning, then I'm not in it. Holiday hype gets margin called the minute I'm missing. It ain't Christmas if it ain't with velvet. Ornaments dim our toy line freeze and joy gets shelved without my presence fail. I'm the rhythm in the blizzard, the pulse of every sleigh bell. Yeah, the winter breaks ends unless I'm with it. Cause it ain't Christmas unless it's velvet. Arrogant accuracy. Even the cookies get nervous when I walk past them casually. Yeah, my charisma's a blizzard, yeah, with a big band backbone. Snow drift, shift key signatures whenever I step into the zone. Yeah, it ain't Christmas if it ain't with velvet. Whole damn North Pole hits a hole like the fair just felt it. In the clause contract, nobody else can help it. If December's a throne, baby, I'm the one who belts it. It ain't Christmas unless it's velvet.
Oh, brother, oh, brother, oh, brother. Good morning, and welcome back to another episode of the Matt Kohrs Show. I'm so happy you guys are here to join me at the crack of dawn on this beautiful Thursday, December the 4th, where we're about to see the opening of the world's largest casino, and maybe, just maybe, we can make a couple shekels. If you haven't already, put your hands together. That was a great song. Shout out to Chaos, crushing it every morning in here, giving us that velvety music goodness, getting our day started on the right foot. Give him a little shout out. I think he's already in chat today. I'm stoked about today. And by that, I mean, I think it's going to be a little bit of a calmer day. So we're going to be able to chit chat back and forth a little bit more. Hopefully it's not one of those days where you get sucked into the vortex of trading because you blew out a position early and you spend all day trying to get it back. Or maybe it will be one of those days. I have no idea. I'm not clairvoyant. I don't have a crystal ball, but I do have an idea of, on the bull case, where we might be able to go, on the bear case, where we might be able to go, looking at some key levels, looking at where the big money has positioned themselves. So of course, I'll be breaking all of that down. We could also have a little bit of a chat about individual equities. I see some people already talking about the Rumble stock. So yes, if there are questions on that, I'm more than happy to answer it. Why there's many questions, if you're scratching your head this morning thinking what's going on here, it's because yesterday I posted a video sharing all of the short interest related numbers to ticker symbol RUM. In the past 2-ish weeks, it's up about 40%. That's a big gain. So it's starting to catch people's eyes. Enough people bringing it up to me because I'm invested in the stock, but I don't really actively trade it. But then all of a sudden I started diving into the numbers. High short interest, high cost to borrow, maxed out utilization, the days to cover continuing to increase and increase. And this all seemed to happen right when the stock bottomed out. So on a relative basis, all the shorts who got in there are really underwater. Not only are they underwater because of the price movement, but then don't forget, they're down that much. They're down also whatever their cost to borrow fee is, and they're going to be paying that. And then from there, sentiment really just going against them. So all of a sudden, it seems as if they picked a really inopportune time to bet against Rumble, as it had this narrative update of Tether, one of its biggest backers, throwing more money at the company, doubling, tripling down in support of its AI efforts. So there's a lot going on there. And I know in the video yesterday, we got over all these terms like shares on loan, short interest, Ortex estimates, cost to borrow, utilization, short score. So if there's any specific questions on like what those numbers mean and what they don't mean, I'm more than happy to hop into it. So especially today, I'm expecting a little bit more quietness in the market. So like I said, if you have those questions, I'm more than happy to either give you the answer, or if I don't know it, be able to look it up or ask someone smarter than I am and get it back to you ASAP. So we're going to be, and on top of Rumble, we do have some news on Salesforce. We also have some news on Meta, so we'll be going over that. We're going to be talking about the Fed chair, the overall market structure, and basically how I think the market is going to be in this like cautiously bullish grind to the upside as we are just awaiting the FOMC meeting next week. I'm here to tell you my personal opinion of the market is I don't think anything that crazy is going to be happening until we get the results of the FOMC meeting. And we already know it's going to be a 25 bips rate cut. The market is like 90% confident that will happen. But what's going to be interesting is the conversation afterwards, and all of a sudden diving into the individual opinions and trying to get the structure of how the FOMC is going to look, as Jerome Powell, the end of his tenure will be in May of 2026. Most likely Kevin Hassett is going to be named as the replacement very soon. And what does that mean? What does that not mean when we have the shadow Fed, and how is it going to influence the interviews and the questions, how it's going to influence monetary policy, how's it going to influence your decisions, my decisions? There's going to be a lot to get into. So we're going to be talking about that as well. Folks, once again, thank you for joining me so early. If you haven't listened to the song already, rewind to the start of the stream and then come back to wherever we are, happen to be live. And in the middle of that, if you guys could do me a huge favor, this won't cost you anything. I'm not asking for money. I'm asking for you to take 1/2 second of your time, go over and hit that like button. If you've already done that, hit the subscribe button. If you've already done that, turn on your notifications to all, because right now, for whatever reason, especially on the YouTube side of things, they really don't like promoting it. All that stuff is free, and it greatly helps me out, grows the Goonie community, and on both Rumble and YouTube gets this video, this show, this community in front of other people who might want to be joining up with our Goonie trading hive mind. So if you haven't already, like, subscribe, turn on those notifications. And with that being said, I should probably do my part of the show. Stock futures are little changed as rate cut bets strengthen. So right here, the rate cut, the fact that most likely in 6 days, Wednesday, December the 10th, next Wednesday at 2 p.m., it's going to be announced that we're going to get a 25 bips rate cut. And this sentiment all started early Friday morning. Friday, November the 21st, after the market had this big gap up and it was a bit strange, we got hit and then we kind of recovered around 7:30 in the morning, 2 hours before the market opened. The New York Fed President, John Williams, basically said, yeah, I'm pretty sure again we're getting a 25 bips rate cut, and that dramatically changed the odds. Like we saw it across not only the event market such as call, and poly market, but we saw it in the bond market, the yield market, like all that stuff. We start to see those changes, and ever since then we pump. A little bit of a choppy sideways action over the past 4 to 5 trading days. Folks, we have a panther on the loose. I guess she wants to say hi early today. You're usually sleeping right about now. Do you have anything to say on monetary policy? Anyone you want to inform about what's going on? Now's not the time to be silent. Now's not the time. She acts like this in front of you guys as if, like I'm such a super well-behaved cat and I just like to hang out. And then like I'll put her down and seconds later she'll be like biting my ankles or just slamming into a wall for no reason. But now when you're on the show, you get all quiet. She just gets nervous as the lead chief investment officer of the program here. She gets a little nervous. Maybe she just wanted me to put her down for the nap. Anyway, where was I? Friday, November the 21st. This is exactly when John Williams said, yeah, probably 25 bips rate cut. Ever since then, not only do we recover this sizable sell-off on Thursday, the 20th, but we overshot it and really pretty strong up until last Wednesday and now just kind of going sideways. But then as you can see in pre-market trading, not to bury the lead or anything, the SPY, the Qs, everything's looking pretty strong right now. We're like literally in real time. We're just pumping. So my base prediction is that this will be continuing, just looking at the price structure, the momentum, and the option flow, which is also improving. That my base plan, what are you doing there? You really want to say something again? My base idea is that we will continue this slow grind to the upside until the next major event. And personally, I identify the next major event to be the FOMC meeting, obviously of Wednesday of next week. So basically, I think today, tomorrow, Monday of next week, maybe even a little bit of Tuesday, I'm personally looking to scalp some futures, most likely to the bullish direction. And I'm also looking to sell premium and just capture the vol crush all the way up until that FOMC meeting. Of course, between now and then, other things could happen. Other things could develop. Trump calls off Witkoff's meeting. Putin reasonably good. Brother, what are we doing today? What do we do? What are we doing? Do you want me to? I think she just wants to hang out a little bit. So right now, there is more and more news as it relates to what's going on with Russia and Ukraine. And of course, any big announcement on the conclusion of giant global conflict, well, that might be interesting to the market. So I just wanted to call that out. We're kind of slowly but surely tracking this story. There hasn't been the biggest developments. It sounds like they're quote unquote having these marathon meetings and not much is coming from it. But as of now, it does seem like both sides are reasonably happy. Even with that being said, though, at one point, Russia did pop off. Europe's plan to use the 105 billion of frozen Russian assets, tantamount to war, according to Russia's Medvedev. On top of that, we had Putin, the president of Russia, basically saying, hey, if Europe wants war, we're more than happy to give them more. So it's not like everything is hunky-dory. They're not holding hands, singing Kumbaya or anything like that. But it does seem as if all sides are being brought to the table, and maybe even if it's kicking and screaming, they're going to be brought over the finish line. So just want to keep that on everyone's radar because like it's a binary event. We might be getting an update at like any random moment. So I just wanted you guys to be aware of that. Are you done? Are you done today? All right. Now bringing it back to really the things we do know about. All right. Another thing. The odds are dipping a little bit for Kevin Hassett. Not long ago, they were at 86%. Now they're at 73%. Kevin Hassett is currently the director of the National Economic Council, which is a part of the Trump's administration. And you can see that the odds really started to explode not too long ago, basically getting into December. And this is just because the commentary from Trump and other members of the administration. But right now, Kevin Hassett is the leading dude, like for sure. And that's another piece of information that the markets like, especially equities and crypto, because he's viewed to be dovish, and dovish is going to be more supportive of rate cuts, and that makes capital cheaper. And then even though capital's cheaper, that helps stocks go to the upside. Obviously, the downside is it does increase inflation, but hey, you got to pick one, you got to pick the other. And he is viewed to be a little bit more dovish, but it does bring up the question, well, if he is leaving in May, from his director position to become Fed chair. Well, apparently Bessent might take over. Bessent under discussion to also lead the National Economic Council. So Bessent being Treasury Secretary and the director of the NEC. So this is a little bit of news from yesterday. Just thought I'd share it with you.
It's Balance of Power on Bloomberg TV and radio alongside Amara Omokwe. I'm Joe Matthew with breaking news in Washington. It just crossed the terminal after we took air this evening on Bloomberg. There could be a new help wanted sign going up at the White House, of course, if Donald Trump chooses Kevin Hassett to be the next chair of the Federal Reserve. That's the expectation. And if he does, Donald Trump's aides and allies are now discussing the possibility of making Treasury Secretary Scott Bessent the top White House economic advisor, jumping in to fill the place of Kevin Hassett. If indeed he does go to the Federal Reserve, this would make him not only Treasury Secretary, but also leading the White House National Economic Council. This is Amara's day job, covering the Federal Reserve and the related agencies that we're talking about here within the White House. This would be a pretty big deal. Does Scott Bessent have time for two jobs?
I mean, that would be a big question, but I think what this reporting reflects is how trusted Scott Bessent has become in President Trump's eyes. He was leading the interview process for the Fed chair search. Of course, he's running point on many of the administration's economic priorities, tariffs, you name it. And he's also been one of the chief defenders of President Trump's economic agenda. Earlier in the administration, he was saying he wouldn't come out and talk about Fed policy. He wouldn't come out and talk about the need for the Fed to lower rates. But now we hear him talking about the Fed all the time, talking about the need for institutional reform. So that just shows how much of a champion he is for the president's economic agenda. And so this reporting actually makes a lot of sense.
Well, so if we're getting news like this from Nancy Cook, does that mean Kevin Hassett actually has the job? She's reporting is at the top of the list.
I mean, that's what our Bloomberg reporting
would not be
shows,
a surprise.
That Kevin Hassett is the front runner, that he has kind of taken the lead among these last five candidates that remain. And it makes sense. Again, he has been lockstep with President Trump on the need for the Fed to lower interest rates. Pretty much on every economic issue, Kevin Hassett has been lockstep with the president.
Really interesting. We'll see where this goes.
Yep.
There's no disagreement across the board in terms of sorry, here we go. It feels like whenever she walks like this, it's like a Jaws situation. Like I want to play the Jaws music in the background because I feel like any moment she might just pounce. But something's got her all spun up right now. Generally, when I'm starting the show, that's about the time that she starts to nap for literally the entire day. So I don't know what's going on today at all. But she's also now playing with the cords of all my computers and cameras. And if I just randomly go dark, or if the stream randomly drops, or if my mic cuts out, I just want you to know it's not my fault. There is a rogue micro panther in the studio, and she's actively right now playing with the Velcro that holds some of the cords together. So this is, it might be one of those shows. Uh-oh. Dude, why don't you just chill out? Why don't you just chill out for a second? Why don't you just chill out? It's going to definitely be one of those shows. Hey, why don't you just take a nap, dude? Why don't you just take a nap right here? She's like 4 different beds in my studio alone, and she chooses to not be in any of them. Doesn't really make the most sense. All right, coming back to specifically today, early this morning, 8:30 a.m. ET. Basically, I don't know, at this point, 50 minutes ago, we got the initial jobless claims coming in less than expected. They expected 219, came in at 191. So even though that's good for jobs, maybe not the best in terms of monetary policy, but remember, this is just a drop in the bucket of everything kind of really going on. And right now, the odds are still pretty high that we are getting this rate cut, 92% as of this morning. But to give you guys more insights to the job numbers of today, U.S. employers made 71,000 new layoff announcements in November, officially bringing the 2025 total to 1.17 million layoffs. This now marks the first year with 1.1 million plus job cuts since the pandemic lockdowns in 2020. American consumers are in trouble. Right now, I'm not saying all of this is because of AI, but a good chunk of this is because production really from one individual worker is now higher with the help of AI. So all of a sudden, you don't need as many jobs. Really, you just don't need as many openings. So the job market, it's getting tight out there. Like the labor market is definitely softening. So something to consider. And if you happen to be a person watching this show and you're looking for a job, dude, my thoughts are with you, because it seems like things are getting a little bit complicated out there. And because of the general softness in the labor market, that's exactly why this upcoming meeting, we have a 93% chance of a 25 bips rate cut. So that's what's going on. And honestly, this has been the same story for a hot minute now, and not much is changing. And that's why, in my opinion, we continue. What are you doing? What are you doing, dude? I need a third arm. That's, in my opinion, why we continue to see the market go higher and higher and higher. Now, with respect to individual companies, yesterday we heard from Salesforce, Snowflake, C3 AI. The major one that I think most of you care about is Salesforce. Salesforce beats on earnings, issues better than expected revenue forecast. If you're curious about Snowflake, it didn't go so well. Technically, we're in earnings season, but if you ask me, it's kind of the quietest part of earnings season, like just relative to, I suppose, no earnings season at all. But after this, it really slows down. Then we have a couple week break, and then it's going to start up once again. And I already see many of you talking about Meta early this morning, and I actually have some not so good news on Meta. Meta faces Europe antitrust investigation over WhatsApp AI policy. The probe will examine whether Meta's new policy on allowing AI providers access to WhatsApp may breach EU competition rules. So just as it gets out of one monopoly accusation, it gets right into another one. Now, obviously, I'm bringing this up. If you ask me, I know most of the time we're here talking about individual, I guess, trades and short-term stuff, but just to take a second to talk about investments, I mean, I've been saying it for a while. As soon as it got to below 600, I thought it was interesting. I was ready to buy a bunch of Meta at this downside gap fill at 550. And even with this 6% gap up early that we're seeing this morning, I still think in terms of a longer duration swing play or straight up investment, I think right now, given the current market setup, the current trend of technologies, I think Meta is one of the best, if not the best positioned equity right now. Risk reward, you're buying it on a discount. Many of these other ones are already trading at sky high valuations. Meta, I mean, technically you're now off by 6%, unfortunately, but anywhere in here, I've been slowly adding to it. To be completely honest, I was waiting for a chunk at 550. Obviously, just has not come. And honestly, I might have missed out on that. So some of the other stuff, I basically didn't get the biggest position that I wanted. But when this thing was screaming at 800 and I get to pick it up for a 25% discount down at 600, yeah, to me, it was a no-brainer. So once again, I'm not necessarily talking directly about like active trading of like what's happening today, this week, this month. To me, I was like literally just putting it in my long-term portfolio. Before that, the other one that we talked about a little bit was ASML. I was adding it like no other in the low to mid 700s here and here. And look at it now, 1,122. And once again, it's not an active trade. It's just in my long-term investment account. I got in at a good price and I'm more than willing to hold it. So Meta right now is one of the most interesting to me. And I've already been in Microsoft for a little bit. I'm actually waiting to add more if it gets hit again. This isn't enough of a dip for me to put in because I already have quite a bit of exposure. I mean, I think most of my fill, I think my average cost basis on Microsoft right now is 190. I got into it in 2021. Like I said, I think it's 190, 198. It's below $200. So I was looking good. Then I was looking stupid. Then I was looking really good. I wish I added more here. And then it just had this gap up and run away. So I'm happy to add more into it. But like I said, my average cost basis is it's below $200 on this thing. So I like it. I'm not saying anything bad about Microsoft, but if I'm putting things in my long-term investment account, you have two options. You're either buying it on nice percentage dips or you're dollar cost averaging and going and going and going. And the way that my, I guess, own life situation is set up is I kind of do one big investment during tax season. So for me, I'm just kind of looking at the ones that I want. And yes, I find Microsoft to be interesting. I find currently Meta to be the most interesting. And there's a couple others that maybe aren't like the most popular ones out there in terms of the ones that we talk about. But basically, that's it. So I know a little bit of a side tangent. Microsoft looking strong this morning in the face of news that isn't so good. But in terms of just like where the stock's trading, on a longer time frame, it's looking pretty solid. If you haven't already, sign up for the newsletter. It is 100% free. Comes your email inbox every single Sunday. I break down what's going on in the market, cheat sheet for earnings, cheat sheet for all the major macroeconomic events. There's nothing else scheduled today. That doesn't mean that we're not going to get surprise news, but with respect to like what's already on the docket, well, we already got the initial jobless claims coming in slightly lower than expected. Tomorrow, 10 a.m., we are getting that PCE, the personal consumption expenditure. With respect to seasonality on an individual day basis, this day over the past 27 years, some of the days have been bullish, some of the days has been bearish. It does net out to basically being neutral, but I do want to let you know that tomorrow is actually dominantly bullish. Friday, December the 5th, the bulls have won this day 57% of the time, so a 7% edge. But if you look at the profit factor, basically over the past 17 years, this equity curve is nice, just bottom left, top right type of action. So is that a guarantee? No, I'm giving you the odds right here, but when the bulls win, they win it more handedly than when the bears win it. So I just want to let you know the seasonality for concluding really the first week of the new month. All right, let me bring it back to SPX here. Very quickly, I do want to go over today's key levels. So the first thing I should show you is this is the setup. Just so you know, we are currently trading at 6865. So we're pretty much just above yesterday's high. When we are above yesterday's high, what is the first thing that I'm going to call out to all of you? Pop quiz early in the morning, Thursday pop quiz. Whenever we see an opening above or below the other day's extreme, the recent trading sessions extreme. Right now, we are scheduled to open up at 6865, 6868, something like that in here. We are above. Yesterday's high is 6862. What's the first thing I'm going to tell you? Am I rich yet? I don't know. You're rich in friendship if you're in here. Gap fill reversal. Well, generally we just call it a gap fill. But yeah, that is something you should be mindful of on SPX, on NDX, on SPY, on QQQ, on RTY, and IWM. When you're talking about these major indices, the proclivity, the high statistical likelihood of them filling that gap. Once again, a gap is created when you open outside of the recent day's extreme, as in either above the previous high or below the previous low. You are outside of the extreme. The market loves to test those untested areas of supply and demand, as in that gap. So there's a lot of different pieces of reasoning of why that might happen. But if you ask me, it's becoming one of those things that now so many people talk about it, it becomes a self-fulfilling prophecy. So depending on where we open up, right here, we're still at 6865. That is a little bit of a trade opportunity. Obviously, there's not much meat on the bone, but it's just something I wanted to bring to your attention. I should also let you know when you're playing gap fills, if the gap is produced by news, for example, an inflation report, a jobs report, something like that, the odds do drop. The odds are still decent, and sometimes in certain situations, they're worthwhile to play. But I want to let you know the chance of the gap fill happening when it is clearly a news-driven gap fill, like some sort of big macroeconomic announcement or something like that, it becomes less likely. So I just want to put that like on everyone's radar. It's not something that you just arbitrarily want to play all the time or willy-nilly. So just want to put that out there. But anyway, these are the key levels that I'll be looking at. Obviously, we're opening up roughly where my cursor is. So you do have support at yesterday's high. You also have support at yesterday's close value, which is also a key psychological level at 6850. It's also at the top of the transition zone. So bullish above, bearish below, choppy within. For me, if we bounce off of any of these levels, I'll be looking at 6875 and past that, the key technical, psychological, and gamma level at 6,900. You can see 6,900 right where my mouse is now. That's where we go from negative gamma to positive gamma, i.e. this becomes major resistance. Of course, that doesn't mean we have to get rejected. If it keeps going, I'll be watching 6,925 and 6,940, but it's up here where I expect the price action to slow down in terms of momentum and velocity, just because as of market open, we're running into quite a bit of positive gamma. Now, on the flip side, all of a sudden, if we don't hold the gap fill, if we don't hold the closing value and we push to this transition zone, I'll be watching 6850 followed by 6830. That's the bottom of the transition zone. And then in here, you have kind of a 25-point region of quite a bit of technical support and psychological support. There is a gamma level at 6815. You have the previous closing value at 6810. You have the close before that at 6806. You have the psychological level and gamma level at 6,800. And below that, you have a new gamma level at 6,790. So So in here, there's a lot of stuff going on. I wouldn't be expecting us on a day like today to vomit below it. But if we do, then I'd be looking for the downside gap fill at 6776. And you might be surprised to know that that was created back here between Tuesday the 25th and Wednesday the 26th, where we had this high, we gapped up, we never got the gap fill. Right here, you can see the lowest we got was around 6783. So you basically have roughly a 7-ish point gap to still be filled right there, which would be basically a failure of this trend line. So those are the levels I'm watching. And obviously throughout the day, we will also be watching the options flow. And on that note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all, play responsibly, and if not, have fun. All right, like I said, we are opening above, and look at that. The Qs almost got their downside gap fill anyway. I think they just perfectly tagged it. Once again, looking for yesterday's high value. I honestly, even though I'm bullish on the day, as I've already said, I wouldn't even be looking for a bullish play until we get the downside gap fill. And boom, we just got it on the SPY. We just got it on the Qs. So if you played that, it didn't even take 1 minute. But right here, we opened up above the high value. SPY hit it. Qs hit it. SPX, hang on, let me zoom in here just to make this a little bit easier. SPX just got it, and I would also assume NDX got it. NDX also did get it. So basically across the board, this one happened very, very quickly. Depending on the size of the gap, a lot of the times the size of the gap has a lot to do with the timing of when the gap gets filled. So if you played it, there wasn't the most amount of points, but if you played it on ES or NQ and you played multiple contracts, you're actually kind of already done for the day. So obviously I didn't play it, and I don't want anyone to think I did play it because I'm letting you know I literally did not play it. But it is a strong play, and there's a lot of people out there who have bot systems who literally per day are just looking to play gaps on not only some of the largest indices, but they've also statistically identified some of the strongest equities that do the same type of reversion. Not all equities are built the same. Not all indices are built the same. Certain ones trade in certain cadences and styles. And obviously, that's why I believe when it comes to the world of trading, you're better off to have expertise in a certain niche rather than a breadth of knowledge. Of course, having a breadth of knowledge might be useful here, there, and everywhere. But in terms of like consistently making money, you're more so paid for expertise, which means you're probably more so paid to have like an intimate knowledge of how a particular thing moves and knowledge of its options and its management team, if it's a company, this, that, the other thing. But in my personal opinion, when it comes to the market, when it comes to the market, basically expertise pays, not breadth of knowledge. But I like to mark out the overnight trading session high and low on NQ, especially for my trading, 25,732, 25,603. So we have about a 130-ish point range from the overnight session. We made the low around 3:20 in the morning, and we made the high around 9:10. So those are good target levels to have. I did some studies on this specific to NQ. And if you look at the overnight session high and low, basically from market close to market open, that high and low of regular trading hours, these are taken out in excess of 85% of the time. As in, if you can catch the trend, that's a nice level to have just because of how often they are taken out. I should show you guys, I didn't break my rules. I didn't do any pre-market trading. I have my accounts. Here's my 15 quote unquote big Apex accounts. They're each up about $27,000, and I have 15 of them. I have 2 new PAs. I don't know what happened to the other 3 that I had, but apparently I only have 2 right now. And then in terms of take profit, I have my fresh 5. So we have 15 existing accounts that are up, I don't know, close to $400,000. And then we have 7 accounts that are brand new. So that's the skinny on the situation. Icarus is on, and I've applied Icarus to all 7 of the new accounts. Obviously, if you were here yesterday, Icarus was kind of fine, but it was also getting a little bit of weird fills, and the risk management didn't seem to be the best. And I'm happy to report to you that I was able to actually find the time in my life last night, to improve some of it. So do I think Icarus is going to be perfect today? Well, I'm hopeful Icarus is perfect today, but I just wanted to let you know Icarus is on. I've made some improvements. I did even do a little bit of back testing for the first time in ever. So I have higher hopes than normal for Icarus's performance, but I should let you know, based on how we are opening up right now, we had a lot of well, look at that, we already took out that overnight. So if you took that downside gap fill and said nope, we're going for that low, that was a nice trade. We opened up at 712, and you could have rode this all the way down to 600. That's crazy. That would have been quite a trade, and you'd be done. You'd be done 4 minutes into the day. Obviously, this is not statistically common, but this is another point of if you just know some of the basic stats of whatever you're trading. I like to trade the overall market. It really can help you out quite a bit. I mean, that was a natural target level. I'm not saying the speed at which we hit it is by any means normal. I don't think it is normal. I mean, we just vomited. But you could have taken it off, and we've actually already puked another 40 points since then. That is crazy. The SPY is already at the closing value. The Qs are already in the red. Tesla did pop, puked. Meta did pop, and now puke. Where are we? We might be finding support at this green to red test. When I say green to red test, if you don't know what that means, the closing value is 6849.71. That's where we closed yesterday. So relative to today, we will be green on the day, as in we've gained if we're above it, and we're red on the day if we're below it. So when I say green red test, that means we're going from being green to testing potentially going red. Not such a surprise that we're bouncing exactly at this level. Key technical level, key psychological level. It's also a key options level right here. You can see positive gamma node at 6850. No surprise that there's an attempted bounce. You might be thinking, well, what's the bounce from? It's probably a combination of shorts taking their profit and also bulls entering the market right there. Once again, just bouncing off this key gamma level. I see some people shouting rum. What is going on with rum this morning? Rum, wow. Up again. The daily chart on rum is nuts, and this is exactly why I made a video on it. Folks, you are witnessing now. Please understand, short squeezes are not binary. It's not, oh, we are short squeezing or we're not. It's a gradient. And right now, to some unspecified degree, this is legitimately squeezing. And how do I know it's squeezing? Well, from the low until now, it is up 51%. And it did that in about 16 days, 11 trading days. So basically 2 full trading weeks, it's already up 51%. So the percentage gain itself doesn't mean it's squeezing. You know it's squeezing when there are shorts who are getting squeezed out. And I made a full breakdown video on this yesterday, and I'll get you today's updated numbers. We know that there are shorts getting screwed on this one. Right here, it is around a 25% short interest, and it really started increasing in mid-November. Mid-November is right where this bottomed out, as in the shorts piled in at the worst point, and now they're paying a hefty price. So you can see it spiked up there. Short interest currently 25%. The shares on loan, which is the theoretical max amount of legal, legitimate shorts at this moment in time, is 54 million. And in terms of that, that's the legal, legitimate, like max amount. Ortex is estimating that actually about 27 million are actually choosing to go short. Because remember, to take a legal, legitimate short position, you have to first take the shares out on loan, and then you can execute the trade. But just because you take it out on loan doesn't mean you actually have gone short. So this number is it's always going to be the maximum number of legal, legitimate shorts. But unfortunately, we don't know the true number of shorts in real time. You can get very fancy schmancy estimates, but it's always basically behind by roughly a month. But anyway, another thing you can track is the cost to borrow, and the fact that we are averaging at 27%. And you can see, surprise, when did it start to pick up again? Right there. So what fascinates me about Rumble is right here. This area where it was seemingly getting beat up, that's when the shorts decided to get in. You could see the short interest, that's where it spiked. The cost to borrow, that's where it spiked. The shares on loan have been picking up, honestly, ever since mid-November. Short interest right here, large spike. So what fascinates me is this chunk where price seemed horrible, that's where they were getting in, and they've been building into the short position on its recovery, but the stock keeps going up. So in this whole push to the upside, not only are they down because of the percentage gain, because it's the opposite of going long, but don't forget, they're also playing a cost to borrow. And granted, this value is if you held it for an entire year. I don't want anyone to think this is what they're paying daily. But the fact is even if the stock is going sideways and you're short, well, you're still losing money because of the cost to borrow. And then in a situation like Rumble, it's even worse because the stock is going higher and higher. So you're losing on that. You're also losing on the cost to borrow. And the more it goes, more eyeballs get onto it. And then all of a sudden you might have a situation of a gamma squeeze of FOMOing into the options market. But you could tell something's up because we're pretty much maxed out in utilization, as in terms percentage wise, in terms of the pool of shares that could theoretically go out on loan, 99.5% of them are out on loan, as in this is the max amount as of the date of this morning. Now, I should also be clear, this gets like really nerdy. that number can go higher with the utilization staying at 100% because of a process known as rehypothecation. So basically it's daisy chaining. Someone is short. To go short, they sell it to the market. There's a new owner. That person could put their shares out on loan. A new person could take those out on loan. And then all of a sudden they could go short. And that process can repeat and repeat and repeat. It is sometimes referred to as daisy chaining. The actual name is called rehypothecation. But basically with the same chunk of shares, you can go short, they go out on loan. You could go short, they could go out on loan. And as they ping pong through new players, or maybe even the same players, it's the same set of shares, but that's how you can get into a situation where your utilization remains maxed out and yet your shares on loan continue to climb and climb and climb. So right now I am in Rumble. I don't want anyone to think that all of a sudden, like I'm just talking about it. Like, I mean, I love that it's going up because I'm invested in Rumble myself, but I want to put a key emphasis on invested. I'm not actively playing the stock and I'm not actively playing options. So I just have my core investment. I've had it for years. I'm going to have it for years. So I find it fascinating that this is happening. I think it's a cool mechanism to learn about because we haven't really seen this play out in a while. But like I said in the update video yesterday, this is a very worthwhile thing to put on your watch list. You might be watching this and thinking, okay, I don't really want to play short squeeze play, and that's fine. Or maybe you do like Rumble, don't like Rumble, and maybe you do or don't like it for very different reasons. What I'm saying is this is actually a legitimate learning opportunity of how sometimes you get these, well, depending on the side of the trade you're on, either positive or negative feedback loops. And right now, we can see where the stock bottom, we can map it over with where these numbers, these metrics started to get, I mean, literally, this is perfect. The cost to borrow was nothing, started to explode. Where did it explode? November 18th, 19th. Look at right in here. It's telling me that we have secondary information that people are getting absolutely goosed to the short side. And the more and more people that are in pain to the tune of potentially 208 million, it might double up. So we might be talking about closer to 375, 400 million. They are on the ropes just getting destroyed right now. And all of a sudden, this is just looking at short numbers. We're not even looking at what's going on in the options market. That's a phenomena that can produce what's referred to as a gamma squeeze. Feel free to look that up. That's not really the core point of what I'm trying to say right now. But those two things can play off of each other. As you have more of a short squeeze, it could prompt a gamma squeeze. As you have more of a gamma squeeze, that could prompt more of a short squeeze. And they kind of just ping pong back and forth. And that's where you get some of these very explosive movements to the upside. And I would argue you're already kind of seeing that because once again, this stock is up 50% in 2 weeks. That is a big, big move. So like I said, throw Rumble on your watch list. And also, I suppose since we're here, are there any specific questions on what these numbers mean, what short interest means, short interest value, days to cover, shares on short interest, shares on loan, the process of taking a legal legitimate short, cost to borrow, utilization, short score? Like, do you guys have like, hey man, I kind of get what you're saying, but I need a little bit of help with like definitional stuff or even mechanism stuff of what is a gamma squeeze? What is a short squeeze? Does anyone like, feel free to ask. This is like kind of what we're here for. Obviously, I want to teach you guys at least what I know about the market. And if you have a question that I don't know the answer to, well, I bet I could track someone down who does know the answer and I could get it back to you. But is there anything like, hey, this seems interesting, but like you need definitional help or anything with that? What is the number 5 mean? It's a little bit more than 4 and a little bit less than 6. Matt, you don't have enough time. What signs would you see for a short squeeze ending? Basically, a lot of shares being returned right here above my head. Because you can track how many are being borrowed, how many are being returned on, like this is from Ortex. They do give you live data. So technically, that's the second stop because to get out of a short, you have to buy it back. And that's really what we care about. So technically, you could buy it back and still keep them out on loan. But most people, why would you keep paying the fee if you're done with the trade anyway? So you'd see a noteworthy spike in returned shares. Well, what is the strike price if you're going in on Rumble options? That's up to you. Does negative gamma increase the chances of a squeeze? A gamma squeeze is specifically a phenomena you see with a lot of negative gamma. Like by definition, you have people YOLOing into long calls that produces a bunch of negative gamma. Price goes up based on the delta value. The market makers have to hedge out the position. They do that by buying. It pushes it higher. More people YOLO in. You get more negative gamma. And that's all just on the option side. And there seems to be something odd in their money assignments. I have no idea what that means. They charge too much for options. What do you mean they charge too much for options? Ubuk. For as much as you've been in here, you think the broker gets to decide the price of options? This is what I find concerning is sometimes we get into the nerds of the rehypothecation of shares on loan. And then there's other people who are at the level of trading and they've been in here for a while who think that the broker gets to pick the price of options. That's not what brokers do. Brokers don't set prices. Markets set prices. Brokers are the person who connects you to the market. No one picks prices. That's not how markets work. You don't pick the price of a stock. You don't pick the price that it isn't set by a single entity. It's set by the market. It blows my mind. It blows my mind. But I think this is a core thing for everyone to realize in terms of where is the price on the SPY coming from? Where is the price on Tesla coming from? Where's the price on Rumble coming from? Where's the price on Rumble options coming from? Where's the price on Rumble swaps coming from? Where's the price on NQ in the futures market? No one sets it. It's just the highest willing buyer and the lowest willing seller. That's where you trade. Brokerages do not set this stuff. Whenever you're talking about any market ever in the world, it is the highest willing buyer and the lowest willing seller. And if they agree on an amount and on a price, the transaction goes through and that's your last trade price. That's how markets work. I remember early in my career, I had that confusion too, because in the world of options, I was learning about Black-Scholes, this, that, the other thing. And I was like, well, hang on, isn't that setting it on the price? No. That's what someone used in terms of a mechanism for them to calculate what they thought the fair price was, as in if they had an edge or didn't have an edge. But other than that, no one is setting it. The market is setting it. It is supply and demand, the highest willing buyer, the lowest willing seller. It doesn't matter if you're talking about futures or crypto or stocks or anything in between. It is just, that's how all markets work. But brokers will freeze and play around with the pricing and execution of options. What the fuck are you talking about, dude? They'll play, once again, brokers don't set prices. They might fuck with your orders if you're on the worst brokerage ever and cancel your orders, this or that, but there's a better chance that you just don't understand the orders. And if you're truly experiencing that, just go get on a different broker. But once again, brokers do not set prices. Brokers are the bridge for you to connect to other traders. That's what they do. They connect you to exchanges. They connect you to dark pools. They connect you to other retail traders, institutional traders, high frequency traders. That's all brokerages do. They are the bridge for you to trade with someone else. Can you check silver and see if we're going to break 60 again soon, possibly? I have no idea if we are. That, once again, decides on other traders. The not price itself and price trend, it's all decided just by the giant grouping of all of us, all traders, retails, hedge funds, insurance funds. It's all of us together thinking, okay, should we be buying or should we be selling? Do I agree to buy at this price? Do I agree to sell at this price? Are there enough other people on the other side of the trade willing to take that trade? This idea of will we go up or go down, you have to understand that that's what the market is. It's the market as a whole. Why are we flushing? Because people are buying and selling at a lower value relative to whatever point you're defining flushing from. That's why. As to why they're choosing to buy and sell at a lower price, you would have to literally go ask everyone who's trading and ask them why they're doing what they're doing. Have you ever witnessed Robinhood's bullshit? You'll know what I'm talking about. That's why I don't trade on Robinhood. Well, I don't trade on Robinhood because but I don't think you fully understand what happened there. They, as a brokerage, once again, they didn't set prices or anything. They just shut down the bridge. They basically said, hey, if you're trading GameStop, if you're trading AMC, that bridge to connect you to other people, they only allowed it in one direction. They basically said, we'll help you offload, but we're not going to help you onload more shares. So once again, they shut down a part of the bridge for their traders. And because of that, honestly, Robinhood gets a lot of flack for it, but it had to... Dude, Piper's going hardcore with my wires right now. Why that actually happened was because, remember, all of these brokerages, they settle out at the end of the day, the whole settlement thing. Options take 1 day, stocks and equities take 2 days. They all meet at the DTCC, the Depository Trust Clearing Corp. So at the end of the day, they look at the net changes. So you're trading throughout the day and they're not settling instantaneously. So they look at all the people on their platform and they say, okay, we ended up being net buyers of this stock, net sellers of this stock, net buyers of that stock. And they look at that net differential and then they settle it out with the other brokerages at the end of the day. And because of that, because there's so much trading happening intraday, they have to have a certain amount of capital at the DTCC. And in this phenomena, especially of GameStop, what had happened was there was such a net influx of buying for GameStop that they didn't have enough money at the DTCC to do all that clearing. I think they had like a $2 billion like bill, basically. They just woke up to it. And I think part of this issue is the computation, the risk computation of what you have to have in terms of these brokerages is not publicly available. It is like intentionally hidden from the public. So once again, I think sunlight is the best disinfectant, and I think transparency always helps things out in this world. And that is one thing. And I know we're really getting into the weeds here, but what really happened, unfortunately, we don't even know the level that could happen at again, because once again, those numbers, that risk computation is not publicly available. They're just kind of like, whatever. Like, maybe we'll give it to you. And the DTCC was more than happy to let Robinhood take the blunt for that and just take the hit. And everyone thinks it was Robinhood helping out Citadel. And maybe it was, maybe it wasn't to a certain degree. Obviously, I don't have that information. But my point is that they, in that particular situation, they weren't the only ones to blame. And my biggest issue with Robinhood in that particular situation was within 1 to 2 business days, that money that they needed, they already had. They just did a quick capital raise and they had it. And then yet they still stopped people from buying GameStop, AMC, and these other players for way longer than that. So that's really where I fault Robinhood. Is I get that they had an issue, which was like a 30 sigma event, which means it's statistically not supposed to happen, and whatever, it happens. But my question there is, okay, if you stop the buying and then got capital and put it at the DTCC, why didn't you allow the buying again? It took them quite a while, like a long time, like multiple weeks to allow people to buy again, even though they had that fresh capital at the DTCC. So that's really where I blame them. And the only other people who are going to reiterate the problem that I have with it are people who actually understand truly what happened and did a deep dive into the situation, rather than just going on like all these stupid fucking like headlines and thinking you're an expert on the situation. The market structure and the market plumbing is incredibly complex, and as robust as it might seem in certain circumstances, in other circumstances, it's actually rather fragile. And if it's not like what happened, like crazy shit clearly can happen. But it's the story of truly, from a mechanical standpoint of what happened in the stock market plumbing, is very different than what people took from just like the headlines. Hey, Matt, show your Rumble average. Very shady shipmate. You have actually become like all the people you used to talk about. I'm disappointed. I've made money from you and Ty, but you used to talk shit. I own it on 3 different platforms. I own it on Public, I own it on Fidelity, and I think I even own it on StreetBeat. I know it's at least on 2, so I don't know how I would prove my average to you. I own a couple thousand shares. Are you actually pushing another squeeze stock after all the shitmates that lost money listening to you? I'm not a shill just to do... Wait, so you mean just covering like factual information? That's what I don't get, is like, you're saying I'm pushing a squeeze. Like, are you saying that I'm making up these numbers? Like, I'm presenting the case to you, and either it's going to make sense or it's not. But what do you mean pushing a squeeze? I'm covering a factual aspect of the market. This is a stock market show. This is a future show. This is an option show. Sorry, I'm here teaching you about the intricacies of squeezes, whether it's a short squeeze or a gamma squeeze. But like, if I'm showing you, that would have the sentiment that I'm making this up. Okay? I am the first one to tell you 1,000,000 times over that just because something has a high short interest, it's not going to squeeze. The metaphor I use is, this is the gasoline. Someone has to light the match, and the match is basically people getting blown out and the price going higher. But I'm the first one to tell you that. Always. I'm always telling you that just because it has a high short interest, that doesn't mean it's going to squeeze. And I'm also the person who says, when you get into a position and it goes decently in your favor, set your stop to break even. Take all risk off the table. So I don't understand at all the criticism. It sounds like you're just pissed off because you don't know how to trade and you're a bad trader and you've lost money in the past. But for the rest of us in the audience who are like, I don't know, like at not the dumbest fucking level ever, understand how to use it. They understand that there is risk involved. They understand how to manage the position from sizing and from stop management. And then there's unfortunately like bitchy little crybabies like you who just like, Matt's pointing out information again. I don't like when he points out information. Brother, I'm not saying you're making stuff up. You bought when I bought and it's shady. how do you know when I bought? You're literally asking for my average, and now you're saying you bought when I bought. I agree it's a short play, but brother, you played a part in a hit of losses as well. Anyone who listened to me did not have losses. There's video evidence of it. There's written text evidence of it. I always said to move your stop up. Always. I said, as soon as, I literally even trade it in real time for people. So this idea of it's because of losses, that's a stupid fucking argument. So what, when people make money, do I get a cut of their gains? If I'm getting a portion of the blame for their losses, do I also get a portion of their gains when they have gains? You're so fucking stupid. The fact that you're a grown man trying to blame someone else for your own stupid fucking decisions, you're an idiot. You're never going to do well in this game. It's not for you. This idea of just always blaming others, you're fucking stupid, dude. You have to grow up. The fact that your psychological development is stunted as a toddler, and you're encased in the body of a man, and you're here crying about it. Whatever. My body of proof I will put against anyone's. My own trading, my own content, my own education. I don't really give a fuck because I already know that I do it the best. I'm honest, I'm transparent, and it's never this shit of, you're such a fucking crybaby. For legitimately, there was no person on this planet who called out the AMC event as well as I did. Truly. I am the person who said, hey, I really think this could squeeze. Hey, it is squeezing. Hey, use a trailing stop loss. Oh, okay. Adam Aaron ruined it with the release of Ape and its backdoor dilution. I was right at every point. I was right on its potential. When it happened, I was right on the management of it. And then when I started predicting its downfall, I was right on that. The issue that I see from this crybaby bitchy community is that people like to come up with an initial opinion and they never want to take in new data. So basically, they're fresh to a certain world and someone pitches them this concept that something might squeeze. They get locked into that and they never change it. And that's one of the worst aspects to have when you're actively trading, is because this is an active market. The information is dynamic from day to day, from minute to minute, things change. And when you are so stuck in your opinion and you can't alter it, you're going to get steamrolled because the market is incredibly dynamic from minute to minute. Rumble right now, theoretically, all the shorts in it could get out. And this thing they would have to buy back and it could shoot up and then it's over. So just because it does squeeze, that doesn't mean every single day you're beating the drum that it's going to squeeze. Negative news could come out about it. All of a sudden, who knows, maybe some random government is against Rumble and they shut it down in a certain country because it's a free speech platform. That could hurt the stock. On the flip side, they can announce a random deal. You're dealing with a game of unknown information. And if you cannot adapt to new information coming in and updating your thesis, you're going to just get destroyed. And that was honestly the biggest issue. Yet you blocked me. Not crying, brother, and I'm grateful. You just disappointed. I didn't block you, and I'm not going to, but the fact that we could all read your message, I just want you to know from the bottom of my heart, I think you're a gigantic pussy. I think the fact that you are acting like a middle school girl trying to blame everyone else for your own shitty actions, and you're too fucking dense to understand basic risk management, basic logic, and you're too mentally susceptible for falling into some apparent random online cult, you're not banned. Why would I ban you? Every single time you talk, it makes me seem smarter and makes you seem dumber. So of course I'd want the rest of the audience to see what you're saying. You're just a fucking dipshit. It's all right. Hey man, remember, when we talk about average intellect, when we talk about average IQ, that means half of the people are less than that. So in any given day, when we're running into people, please understand that half of you are below that bell curve. And sometimes, like today, we just ran into one of them. And I've made it in. I've made good money from you in lessons and also, but I have my opinion on playing another squeeze. If you're going to be a crybaby about difference of an opinion, no, that's not difference of opinion. You accuse me of being a shill. That's massively different. Now, see how when you actually come at them with facts, they walk it back now? Oh, no, I didn't call you a shill. I didn't say that. And actually, in fact, I love your lessons. And you've helped me make a lot of money. But I'm just saying we have a difference of an opinion on this one. See how they quickly pivot this when you actually call them out? No, it's just, I meant it was an opinion. And I don't, they just, dude. You can't reason with a dipshit. Yeah, I agree. No, they just, as soon as you put any like intellectual pressure on their statements at all, they just completely fall apart. You're bullying him? Yeah. I've realized recently over the past couple of years, probably ever since the fallout of AMC, that life is too short to not just be who you are. And am I crass and rude? And sometimes do I bully people on the internet? Yeah. And I guess I'm going to live with the consequences, but I'm also going to live with the benefits of that. What was that one joke that someone said? Matt, you're not everyone's cup of tea, but you're someone's bag of gasoline, bag of wine. Hey, I don't really fucking care. That's the nice thing of like in the market. That's one of the coolest things about the market is if you're an asshole, if you don't play well with others, you can still make money. I pay my bills from trading. If I rub people the wrong way, if I rub people the right way, whatever. Of course, I'm a human and I want people to like me. But if they don't, I also don't give a shit, especially when it comes to random fucking voices on the internet. Can you stop bashing people and just ignore them? Shit gets old. I tune in to hear stocks, not crying back and forth with 10-year-olds. No, I like it. It's what gets me up in the morning. It's day in and day out. I have to prove my vice principal right that maybe, in fact, I'm not going to get married one of these days. Maybe quit rubbing people. Shit, I'm going to get sent to HR. I'm going to get sent to HR. I like you, Matt, sometimes. Well, for the times that you don't like me, that means we have a strong overlap. A strong overlap. I endorse bullying. It makes us stronger. Oh, I agree with that statement. I actually think from a societal standpoint, bullying is incredibly important. Of course, there's like lines that you can cross and it can get too excessive. But little bits of bullying, it puts on social guardrails and it teaches other people how we can properly behave within a cohesive society. I think bullying is an underrated aspect. And unless you have the most savage parents ever, you're not going to get that when you're homeschooled. I think that's one of the biggest benefits of public school. I would say the biggest drawdown of public school is actually the education. But in terms of putting those like guardrails on how you should behave in life, I think public school is cool. I think you could have smarter kids if you're going to homeschool them, if you're good at teaching. Dude, imagine if you were homeschooled and your parents still bullied you to teach you about social guardrails. That would be hilarious. That would be absolutely hilarious. Of just like, you had a mom and dad who like every once in a while just like really fucking picked on you. You come down, like they just make fun of your outfit. They make fun of your hair. Like your parents are just like way too savage. Well, if anyone in here happens to homeschool your kids, I'd be curious to know, do you intentionally bully them just to teach them a little bit more about life? Matt, you were never picked last for dodgeball and it was showing. Hire bully? Yeah, dude. Like you could, a bully for rent service? That'd be interesting just to teach your kids about life. Oh, the original gangster Rick's on? Dude, thanks for the call out.
Now the challenger number. Former antitrust chief Jonathan Can.
It's revised to data, getting a little bit more this morning. Let's get back to Rick Santelli. Hey, Rick.
Dude, this volume's all over the place.
Indeed, we're looking at our September reads on factory orders and our final September reads on durable goods. Factory orders expected to be up 0.3 for September. Still playing catch up on the data. Comes in a bit light at up 0.2, and last month's robust up 1.4 retains a lot of its strength. It's revised to 1.3. If you strip out transportation, still pretty solid, up 0.2, and that follows a minus 1/10. That was a revision from positive 1/10 to minus 1/10.
SPY's getting hit.
Durable good. This series, as I said, our final reads replacing mid-month read, and the replacements, well,
thank you,
exactly
Boston Symphony.
Same.
That's
up
nice.
44
remains,
months. And if you strip out transportation, it improves to up 0.6, same as mid-month
you have some
read.
big support. Put credit spread at 6,820 on SPX.
Shipments, both up a very robust 0.9,
right.
same as the mid-month read.
We're going to move this up. It's now 20
yields, They're revisiting the upper end of the range. We're over 3.5 on a 2-year, up a couple basis points. 409 on 10s, up 3 basis points. And we continue to watch global rates on the firm side. Sarah, Carl, back to you.
Sarah,
okay, thank you,
Carl,
Rick Santelli,
back
with the
to
latest
you.
piece of data. It's good to get data back. We also got some news on jobs, and it's worth reporting, even though they tell very different stories of the labor market right now. The challenger numbers, which we have been watching with increased focus, especially since we haven't gotten a jobs report, a monthly jobs report, showed that employers announced 71,321 layoffs last month. This is according to the
That means
the job
we're
placement firm
1.1
Challenger
million
Gray and
on the
Christmas,
year.
and it is a 24% jump from the planned layoffs in November 2024, so a year earlier. That Challenger data has continued to point to elevated layoffs and is seen as problematic for the labor market. On the plus side, we got the government jobless claims, the number of Americans filing for unemployment claims in the last week. And keep in mind it includes Thanksgiving, so it could be exaggerated by that. But it's historically very low, and that is a good sign for the overall labor market, sort of contrary to what we just heard. 191,000 Americans filing for new unemployment claims. That is the lowest level since September 2022. It speaks to the no hiring, no firing economy. Again, if you saw mass layoffs, you would see this number go up because more Americans would be filing for unemployment claims. We're just not seeing that in the data. I don't know if there's a quirk with the data, Mike, or what, but it's like
Potential trend line.
You know,
All right,
economists
this is
always
getting
say,
boring
don't-
here. With respect to SPY, we are actually, we already broke, and Qs are testing right now. So obviously, we sold pretty hard for the first 5-ish minutes, a little bounce. We put in a lower high. The Qs were retesting the closing value. The SPY was retesting the high from yesterday. And then we took another hit. We bounced again, another lower high. And for the third official test, well, we're at this key level. We are clearly at this key level. Where's Meta doing? We had that up initially. So the SPY is currently testing. The Qs are currently testing. With respect to options flow, the Mag 7 is showing a bit of strength. So I know price is getting beat up, but the flow is somewhat decent. People are buying calls. No one's really touching puts. And then if you look at the SPY, this is the culprit. The SPY was flat until about 942. And then the delta just shit the bed. Right here, you have call selling, you have put buying, the delta dropping from roughly 400 million notional to, depending on if you're looking at the 0DT or not, anywhere from a negative 1.75 billion to negative 2.5 billion. So the delta taking a pretty sizable hit on the S&P 500, while it's actually hitting a new delta high on the Mag 7. So a little bit of a mismatch there. Looking at the flow in terms of momentum, 5-minute, 10-minute, 30-minute bearish, 4-hour bullish. With respect to the NASDAQ, 5-minute, 10-minute, 30-minute are all bearish, the 4-hour still bullish. So the quicker time frames are showing a bit of weakness, which makes me think maybe the bulls are in a bit of control. The Mag 7 just took a hit there. The SPY is legitimately low. Oh. Let's take a look at this. We could probably dip to 618 without the biggest issues, maybe even 619 and some change here. I'm kind of awkwardly watching. Like I said, I've been good. I didn't trade anything yet. We don't have the initial balance quite yet. But what we do have is the 30-minute Orbo. We do have the 30-minute Orbo. Let's line some things up. Let's see what we have going on. All right, so it is 8 minutes past the hour. On days like today, I definitely like to wait and be a little bit more confident about what I'm doing. Obviously, on this time frame, we are trying to a little bit of a trend line break here, technically, retesting. Maybe we have our first higher low of the day. Obviously, I'm kind of watching this structure starting at market open. Let me zoom out a little bit more. Market open was all the way here in the top left. We had a pretty clear vomit. We had a bounce. So relative to this high is a lower high. Then we got a second round of puking where we slightly overshot the low. And then we kind of were watching this succession of lower highs. We're attempting to break it right now. And we might have our first potential higher low. So maybe this is a switch. I am just a little bit worried about the fact that over the past week and a half, 25,600 has been a big level of just choppiness and kind of a pain in the ass. So I just want to kind of mark that out there as well. VWAP is 30 points above that. If you are trying to catch this reversal, that would be a good target. You could target 40. I'm looking at VWAP. I'm looking at this recent high. Obviously, you'd get confirmation on the break and the hold of 600 itself. So there might be 30 to 40 points of meat on that if this is a decent reversal. I don't necessarily like dislike it. It's just at a certain point, is the SPY going to stop puking? The Mag 7 is showing it.
Order submitted.
Hello? Bot's going. Bot's going. Is it this one? Bot is going.
Target filled.
All right. Why did those not get
Target filled?
Oh, it took a little bit more. Okay. So first trade of, I don't know, variant gazillion when it comes to Icarus. First trade in the books, looking good. 90, 90, 90, 90, 90, 90. Is that on all 7? 1, 2, 3, 4, 5, 6, 7. Perfect. All right. So trade 1 went as expected. Trade 1 there. Let's see if we could keep the party going. Let's see if the party's going to keep going. That was a fully automated trade. Like I said, the newest variant of Icarus. That's what the bot's running, as in like fully automated entries, exits, that type of stuff. I am manually trading on the other accounts, kind of a quote unquote safer version of Icarus. Basically, I'm trading Icarus. I just don't take as like all of the trades of Icarus, but basically took... I'm not necessarily the biggest fan of that fucking trade. Why did it? Oh, I need to write that. This is a weird edge case. Wait a minute. That doesn't seem. Let me write. What time is it? 10:09. All right. I need to review this trade because I think it's an edge case. I'm happy it made money, but it was almost delayed by a bar. Right here where it got rejected by the super trend, this bar at 10:09, it should have been in at 80. Instead, it got in a bar later, so it's off by a bar. It should have been in either at 79 or 80. Something's a little weird with that. I need to double check this one. But I do like the sizing. I do like the risk management. Obviously, I'm happy that profit hit, but I want to double check some of the other, but yeah, I mean, we took out that, it got rejected. I'm pretty sure like, unless it had that much of slippage, 75 all the way to 73, that was slow, very slow to react, but I've noticed things get way slower in the world of sim-to-funded trading without a doubt. As of now, we did have a fake out breakout. Ooh, the Mag 7 just started to legitimately turn here, folks. At 10:10, we were at a high, and now we're almost back to that delta low. The S&P 500 keeps going down. 5 minute, 10 minute, 30 minute is all bearish. 4 hours bullish. 5 minute, 10 minute, 30 minute, failed breakout. A failed bullish breakout by definition has to be bearish. So the fact that it tried to get going and it's not looking so hot, not looking the hottest.
Order submitted.
Order submitted.
Target filled. Order submitted.
Oh, okay. Trade number 2 for the bot just hit. They're all at 180, so it's gonna basically, ideally, if things work right, a bunch of $90 trades. I was a little slow to enter that one. I should have been in at 58. I got to fill at 55, but I'm not going to cry. A 3-point slippage is not the end of the world. 72, 73. Obviously, I'm risking that high. And I'm about to get clipped. Maybe, maybe not. If this can take out 57, I'll feel even better about it. Come on, just chill. Be cool. Be cool. It's coming for me. I tempting to catch this flush and a push to a new intraday low, and obviously the market had a different opinion for me. had a different opinion. Basically, what the reasoning for the trade was it was with trend. The 5, the 10, the 30 were all bearish. Options flow is not looking so good. I saw this attempted breakout that failed. I waited for the bounce, and I basically tried to go short right here, hoping that this would capitulate really maybe all the way down to 25,500. So I was willing to risk that high. If I played it smaller, I could have been risking this high, the 1009 high. That's also acceptable. Fuck. Did this just slightly overshoot me? I'm just wondering if I'm getting caught up in chop. Mag 7 got a little bit of a bounce. The SPY is still not looking so hot. We're at 43. That could go.
Order submitted. Target filled.
That one
Order
was
submitted.
definitely late. All right, second attempt. I got knocked out on one on this fresh high, but I'm looking for at some point a capitulation. Where are we on the 10-minute? No. What are some of these extreme levels? What was this level? This was 2430, 2420, 2480. This was 24. Yeah, so the low 2400s are these recent sweeps from what we've seen over the past couple days. So kind of an interesting target to consider. This is getting way too messy. Dude, is this just going to fucking wick me out again? Oh, I'm really wondering, do I want to use this high? Do I want to use 92? If it gets up to 92, the chances of it hitting 600 are so high. I'm wondering, just because of how early it is and how choppy we're kind of getting, if I needed a little bit more room. Because granted, on the very first one, I could have held it and then it was going green anyway. But what time? We're just bouncing again off of 50. Oh, I guess at some point in there, it had a third trade that I guess I just didn't pay attention to. Oh, this was stupid for me to move it up. I should have left it at 78 because even this, it really might just want to tag 600. I might get lucky if it just kind of capitulates from here. But I don't like, that was tactically the improper move on my side. $92. I feel like I'm almost being forced to use 605. I'm looking at this high just because, let me check out Bookmap. Yeah, this is where people are putting their orders. They're not at 92. I don't like that. I'm taking on, good thing I traded one contract. That was like the smart thing, the only smart thing I did. If I had sized it up, I would have had no choice but to keep it a bit tighter. Let's see. Oh, do they want to touch 600? 89.
Order target filled.
Wow. The bot is crushing me today already. The bot is 100% crushing me. The bot's already made 360. Matt, which funded platform have you been able to withdraw the most from? Apex for sure, but that's just also partly because it's a function of you could have 20 accounts. Most of these other ones max you out at 5. So like if you're trading well, you get to multiply it by 20 accounts theoretically at the max on Apex, while the other ones, once again, are 5. That's like, I don't know, I think some of the important math to consider. Oh, do I want to use this? we're seeing these lower highs, but I'm also seeing these higher lows. So now it feels like I'm getting into this coin flip situation of which way is the consolidation going to break. I really like this initial trade that I had way back at 1013. I feel like I waited enough into the day. I identified price trend, price momentum, and option flow. I traded which in the same trend of what I perceived to be right. Unfortunately, price itself just stopped trending. We might be getting rejected at 50. Maybe. I'll admit it. It's a little embarrassing when the bot completely destroys me and does better. Ooh. What's the flow? Mag 7 is still going down. SPY is doing its thing. I thought right there, that little push we just had, I thought that was going to crack it and push me back to being green. I guess not. I guess not, Tonto. Well, you wrote the bot, so past you is crushing current you. That's a fair observation. I'm getting an alert on qubits, QBTS. Is it a breakdown or a breakout on qubits? QBTS. Oh, breakout for sure. Retesting that 50 EMA also got the upside gap fill. I am getting dangerously close to getting tagged out of my play. Getting dangerously close. I wonder if I should have kept the first one. I'm questioning this one because I wonder. Right here, I saw great. Lower high, another lower high. That's why I went short right in here. And actually the bot did too, except the bot scalped it while I was going for the capitulation. And then since then we popped up and made a higher high and a higher low. That's why I'm feeling a little uncomfortable. And at first I didn't want to risk this high at 92 just because if we do that, there's such a high chance that we tag 600 because I'm looking at Bookmap and seeing where these orders are. And even that, actually, they kind of moved it up a little bit. I'm worried that it like overshoots 600, tags me, and then pukes anyway. That's where like I'm thinking of the worst case scenario. And that's, for me, like very real. So I'm trying to give it a second, but I'm not the most stoked with how this is playing out. I feel like I either should have initially picked higher risk or really tight risk. But the fact that on the first one, I picked tight. And then from there, I went to like kind of straddling it in the middle. I'm not happy about that. But knowing that today was somewhat of a choppy day, that's exactly why I'm trading one contract because whatever. Whatever. What is this? Yeah. I'm just trying to track where these orders are at. If it cracks 80 and cracks 70, that could get interesting. We are at the 1 minute 50 EMA, so a potential rejection right here between 90, 95, and 600. In fact, if it falls over at 77, that might be a whole nother entry. Right there, I'm looking for this to crack. Those are sitting buy orders. Sitting sell orders. Fuck. I think it's coming for me. Oh. Maybe.
Order submitted. Target filled.
I can't believe it, dude. The bot is kicking my ass today. I'm down 325 and the bot's up 450. It's not even fun. I'm not even having fun anymore. What was that? 97. All right. If it can sweep this low, 75, I think I might have a shot because then from there, 62. And if it's bouncing off of 62, I could get out for a paper cut. But we are seeing a decent amount of buy side efforts coming in here. And I just need to know if it's going to crack these guys or not. There we go. Come on, crack 75. It did it for a second. Copy that bot. We're testing it. This is day one of the newest version. We're testing it live. Come on, at least go back to break even. If I had real balls, I would have gone short again at 79. Would have brought my average up to 69. I could have gotten one out for break even, moved my average up by 10 points, and then had the runner. All right. Obviously, I'm watching this upsloping trend line. I'm also watching the low at 545 and 540. I think a natural target could be 500 flat. And then if we overshoot it, I think there's a good 60 to 70 point overshoot, just looking at the recent places that NQ has bounced. But my main goal, if you've been here at all, my main goal is to move my stop to break even. I just want it to be a freebie play. When I say freebie play, it means if I'm wrong, I'm knocked out for break even. And if I'm right, great, I make money. But it's the concept of risk management and extreme risk management, which is why I'm kind of self-criticizing right now, is I don't think I necessarily handled this the best today. When I start moving my risk higher and higher, it makes me wonder if I'm becoming susceptible to like potentially going on tilt. All right. And on a move like that, do I have the balls to do it? I know it's the right move. All right, stops break even. Freebie play. This is what I'm talking about. Like literally, I'm streaming this to you in real time. You're seeing the entries, you're seeing the exits, you're seeing honestly, you could probably learn more from my missteps when I fuck things up and I like try to correct during the trade. But this is the most important thing, especially if you're trading on a sim to funded platform. At least in my opinion, it's the most important thing. Is I took all risk off the table. As in, it's not going to get worse. Maybe I get knocked out for break even, and there's a shot of it because this is getting really whippy and these bounces are large, obviously. But maybe it does puke. Maybe I catch it. I don't know. It's just, you can't predict the next bar. So as long, if you are managing your risk, your profits will take care of themselves. And honestly, if we start to puke to 10 to 500 flat, I'm going to move it to 41, guaranteeing myself 15 points, which should bring me roughly to break even on the day. But I need it to flush the 520 level. And there's not much there, at least that I'm seeing. That was a big hit right there at 1025. Look at all that aggressive selling. And now we're kind of stabilizing, and the question is, which way is it going to break? I don't like this. Fuck, all of that. Come on, can I get lucky? And remember, the beautiful thing is it looks like I'm going to get knocked out, unfortunately. But the beautiful thing about futures trading is there's no pattern day trading, so I could always re-enter. And I know, myself included, you go through that point in your career when you're trading with less than 25,000, so you're always trying to like let your trades do this, that, the other thing. And sometimes it causes you to hold on to trades for longer than you know you should. It's because you're trying to not burn a trade. I got out for break even, but it doesn't impact me. It didn't make me money, but it didn't lose me money. But it also did not count against a trade, because in the world of futures trading, there is no pattern day trading. So as much as I'm like, oh shucks, like I wish this like kept going in my favor, and if I had multiple contracts, maybe I could have scaled one out on the rebound or whatever. Yeah, like woulda, coulda, shoulda type of a situation. But I just want to make it very clear that in the world of futures trading, you could do as many break-even trades as you want because there is no pattern day trading.
Order submitted.
Fuck. Well, it's not working. Mom? Well, that was less than ideal. That's a quick way to lose. It's frozen. What the fuck? Well, that's a bummer. Do I need to?
Order canceled.
I don't even know what to use now. I should have gotten out right there. I was trying to play this bounce, the rejection on the failure. I should be out at 60. I was willing to risk 12 points, and now that's gotten away from me. As you can see. Fuck. Oh, I don't like that. I don't like that. Where do we bounce on SPX? We didn't hit 30. Mag 7 is getting a little bit of a pop. SPY is a little bit of a pop. What the fuck is happening here? Damn. That's a little V-shape action. Someone unloaded size and bounced it right back up. What's going on with Bookmap? All right, how can I manage this? I would say the only smart thing I'm doing today is keeping my sizing small. I think that's the only thing of actual quality trading I'm doing. The question is if this starts to fall, do I have the balls to throw on another one to bring my average up? Oh, that's the only real question is, do I have the balls? What's the options flow looking like? Mag 7 kind of going back down. SPY. SPY spiked all the way back up to 50. All the way back up to 50. It tried to get up to 50, got smacked pretty hard. Arbitrarily bounced off of 35, which I didn't identify as a key level earlier today. So that one is a little surprising to me. 35. Oh, okay. I guess that positive gamma node. You'd think that they would want to test 20, though. This level right here, kind of the classic seek and destroy, like put some pressure on this guy. You would think. Stability has increased a little bit. I'm in between just cutting this right here, or if it starts to fall, averaging in another one and moving one of the fills to break even so I could ideally quickly get back. But it seems to be a pretty dangerous 50-50 flip because we're right at this key level that the market very, very much wanted to bounce back to. We puked, we bounced, we're like, it's just right back to here. It's loving 850, which is... but that flow is not so good. Bearish. It's testing over here. Bearish. Decisions. This feels like it's going to be, in terms of trading, my most important decision of the day is how do I manage this current fuck up? Which is, I'm sure, something really stupid that I did. Actually, I already know what I did. It's my fault. It almost wanted to break right there. What's the flow looking like? The Mag 7 flat, SPY tilting a little down. Maybe a potential rejection.
Order submitted.
Fuck. I think I might have picked wrong. We'll find out. I threw in another one trying to use this wall as resistance, using this wall as resistance. And remember, when you come to a key level, you're flipping a quarter. You don't know if resistance is going to break. You don't know if it's going to get rejected. All you could do is just try to keep your risk minimal. So I'm putting my stop right above it. But what I did was I added that one in. And if there was a little bit of a puke, I was putting my initial fill to my new break-even value. So just trying to help my overall average. But obviously, I'm taking on risk to do that. And as of this moment, it looks like I am getting fucked. Oh, maybe I'll get lucky. I need a clear rejection at 600, but I knew I was playing a dangerous game of flipping a coin. I knew we came up to a key level, and when you come to a key level, it's 50-50. So you might be thinking to yourself, how can you win in a 50-50 game? Well, it's by keeping your risk minimal. And that trade itself wasn't bad, because if it was right, it comes all the way back down. The issue is that initial trade that I just didn't get out of when I should have gotten out of it. Obviously, relative to my account, this is all fine. Like, of course, you don't want to lose. I'm not saying that I'm like giddy that I'm down such an amount unrealized, but I do have $25,000 worth of buffer. So relative to my overall buffer, I'm looking okay. If this can crack 79, I have a shot. But it's all, whenever I get to situations like this, basically the concept is just don't go on tilt. Just don't start oversizing and chasing it. Like, stick to the plan. Sometimes variance is going to be on your side. Other times it's not. The issue is when variance isn't on your side, you got to stop yourself. And really, I'm saying this as a mantra to remind myself, to be very clear here, is just don't get tilted. You could have a losing day. You could have a losing trade. You could have a series of losing trades. You could have a losing day or week, and you could still all make it back as long as you don't get tilted, especially when you have as much buffer as I do. I have so much leeway to play with that the name of the game is just don't get fucking tilted. Because when you get tilted, that's when you start risking it all, and you're playing 5 contracts, 8 contracts, 10 contracts, doing dumb shit and trying to get lucky. And hey, maybe you do get lucky, but also maybe variance is still against you and you get busted up. Obviously, that's also possible. Fighting it out at 600, yeah. And in reality, no one can tell you who's going to win this battle. No one, because the winner and or loser of this battle is obviously going to be decided by people trading right now in real time. You don't know if some whale's going to come in and buy, sell, maybe no whales come in, maybe we just get pinned here for the rest of the day. You just don't know. Like, it could be a random announcement from the president, it could be from the ECB, it could be from something with Russia, Ukraine. You just don't know. So the name of the game is identify key levels, try to play off of it with minimal risk, and even if you're 50% right, it should be big gains. And then if you're 50% wrong, it should be small losses. And in terms of where I could have been better today, this one, I should have just force closed it, rather than, by the time I saw it was so far against me that I froze up a little bit and just decided to try to manage it rather than closing it. But you guys know my strategy. I was trying to play this initial rejection. I was in at 47. I should have been out at 60. It should have been 12 to 13 points. And now I'm forced into managing it in a way that I'm not by any means the biggest fan of. So, but even that, there is an aspect to luck to this game. On this one, when I got in, it could have just vomited and I would have looked really smart. So like, you can't, I beg of you to not be judging yourself off of how did it work out. You have to be judging yourself on really everything in the middle of it. Fuck, it's coming for me.
Stop filled.
Fuck me. Oh, yeah, that's fucking brutal, dude. Wait, why didn't it close both? Oh, did I only put fucking one up? Shit. All right, I can't be stupid, because remember, the name of the game is to not fucking spiral. Is it going to retest 600, or is it just going to keep fucking going? What is this high? This high is 42. Wow. Maybe, what time is it? It's 10:38. So this is the 50% retracement off the initial balance. There is potential for a rejection here. I'm watching that. And if it just keeps going, I have to cut it, because the loss will get bigger than I'm willing to accept on a day. I try to keep my things somewhat reasonably in check to the best of my ability. So I'm going to give this a second, just to see if we have that's what this blue dash line is. It's the 50% retracement between the from the opening hour, from 9:30 to 10:30. Obviously the red dash lines are those highs and lows. So the 50% is right there. And here's basically the overall picture of the day. Where's VWAP? We're at VWAP right now. So it might be a VWAP rejection. I don't know. That's what I'm obviously going to be hoping for, because I have not played today well. So where do I want it? I want it to get rejected at 613. What do we have for options flow? Okay, so 5-minute is testing, 10-minute is testing, 30-minute is back bullish, 5-minute is testing, 10-minute is bearish, 30-minute is still bearish. Actually, these are getting close to testing though. Mag 7 did vomit till 1026, picking up a little bit. SPY, same thing, vomited till 1026, picking up a bit. The question is this a true reversal, or is this just like a momentary type of a situation? What do we have going on? Maybe the Qs are going back up. That flow was pretty freaking bad till 1026. Like, pretty freaking bad. SPY. I mean, bad up in the things just switched at 1026, that vomit low. We are back up in. We did recapture on SPX 6850. Like they try to push it below. We took out this. Obviously, you have a natural target of 62, yesterday's high. But this flow, it stopped there. SPY, what was that? It was call buying and put selling. What about on the Mag 7? It was some call buying on the Mag 7, but nothing too crazy, going a little flat now. It's kind of stalled out. It's almost seemingly trying to question, does it like this pump or does it want to retest? Stalled out pretty much at the 50% retracement. Right at the 50% retracement, right at VWAP. They're pretty much the same today. The current volume weighted average price, 617. We overshot it, bounced, overshot it, bounced, and it's pretty much aligned almost exactly. So we're just in that awkward level about where we're going to, like, who knows where we're going from here, which is pretty much fair to say at any point in time. Is it going to hold or not? Man, that flow took a hit today. All right, so I think this, obviously, we had a bearish trend. Everything switched at 1026, this dramatic sell-off that led to a pop. Damn, I wish I played that one better. But the one thing that I'm really noticing here is it seems maybe this little matters a little bit more. This little dip here at 80, whatever this last minute, the 1041 dip. This little shelf here. I want to know if that holds. I'm not being completely sold. I do obviously see this recent uptrend, but that was quite the hit in the Mag 7. SPY, it's still going. It is. We're still climbing back. We're still climbing back. Damn, things were so weak. And I guess that's your proof that at any moment the trend can change. And that's clearly what happened, because when we changed trend today, somewhere between 1027 and 1033, it did so in a rather violent manner. Look at that bounce. Off a strange level too. I think what I'm most surprised about is we didn't hit like some massive gamma level. I really thought that the market was in this mode of testing 6820. If I were to like really articulate my trade thesis right here, this put credit spread, not much going on in this zone. So by the time we crack 6850, where my cursor is, I thought, okay, there's not much there. The next time we're going to bounce is 6820, maybe 6821, 22. But testing this put credit spread was really what I was looking for. Like that's to like really explain it. I thought we were coming down to 20 and we hit 20s actually all the way here. I like somewhere in this region. I am surprised that we hit 30. Like we didn't even bounce off of 30. And hey, maybe we still go. It just, we could take a pretty violent trip there. Fuck. Oh, the real question is do I have the balls to do this? If it does start to break down, do I have the balls to play this? It's what the algorithm says, but I'm like really questioning my own, like, the worst case scenario is I throw in another short here and it pops and I get knocked out of both up here at 40. Would that cause me to spiral? Of course, if I do it and it vomits and keeps going, great. I look like a genius. I make all my money back. I go positive on the day. But I think before you do anything, you should ask yourself, what about the worst case situation? And the worst case situation is we take this back out. We take out the 50% retracement. We take out VWAP. I get tilted into it. It's a fake out and we bounce and I get clocked again. The question is if I do that, do I have the discipline today to not fucking spaz out? That's the real question. We're right at this potential rejection. All right, I'm going to set up a couple alerts. How can I protect myself from myself? I feel like that's the main question in trading is how can you protect yourself? I just wonder if we're stalling out here. Oh brother, 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 oh brother. Is options flow telling us anything? 5 minute might be failing. Mag 7's turning. SPY. $40. I don't know. Folks, team, am I thinking lucidly here? A lot of buyers at 600. It seems as if it wants to retest 600.
Order filled. Order submitted.
All right, where's this? I need to know. I need to handle these two separately. All right, so the horizontal blue lines are the independent entries. Obviously, one was at roughly 616. The other one was at 84. I'm going to handle them separately just because in my mind, the strategy that I'm currently using to ideally get myself out of this hole requires that. Dude, I just need it to puke. I'm worried that I'm going to move the stop to break even. It's going to bounce and knock me and then fail anyway. But I'm in the hole. I can't think like that. I'm in the fucking hole. How big of a bounce is it going to be? It's probably going to bounce up to 20. Or even if it retouches VWAP, son of a bitch. Do I like this trade enough? Fuck, I'm really like this is, hang on, let me move it up just so I can tell you, like show you. I'm worried that they want to retest VWAP. If it is going to vomit, I'm worried that they want to retest this before actually breaking 600, which is my entry. So I'm just worried about my luck of if it bounces, knocks it, and then goes anyway. Oh, fuck. But if it takes this out, I have reason. Okay, cool. It did anyway. Never mind. Don't have to worry about it anymore. Luck was on my side on that one. Cool. So on the Second trade, that one's break even. So the second trade is now a freebie trade. That's what this horizontal line is. That's that stop. And then the other trade that's in this, because it's short too, is this one. So I want to set another stop break even there. So 2 independent trades, making them both freebie break even trades. That's my real goal here. So already good on one. So one of these is a free play. One of these is a riskless play. Second one, I kind of needed to take out 60. But once again, on the screen, these horizontal lines, those are the independent entries right here at 1033. And then again here at 1047. One still has risk. The other one is risk free. And maybe I'll get lucky. Maybe I'll get lucky. SPY took a hit, kind of went flat. It, surprise, surprise, it's rebalanced that fit. I really think they want to test this 20 level. I think they want to, this put credit spread. I really think they want to fuck with this guy, and we didn't get that close to it. We only hit 35. We still have 15 more points for this player to be tested. Right here, 20. Flow is down. That's cracking there. Cracking. I'm slowly but surely getting myself out of this hole. Slowly but surely. Like I said, I needed to take out 60 to put the other one at break even. I could do that, or at on a hold below 80, I can move them both to the average break even. That's another tactic I could do. But what I'm really hoping for, like, I'm hoping it just cracks this 78, goes all the way down to 43 and dances there for a second, and then all of a sudden I'm back even, green, blah, 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 blah. Blah, 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 blah. You know how it is. Oh, how do I want to do this? Okay, so what I'm going to do here is the second tactic of what I told you.
Order
so
submitted.
Both are break even at the average between the two, but really what I want to do is this first fill at 84. I want to hone in on that. But at least my current trade is no longer, like, unfortunately this sucks for me. I am down 1.6K per account. So if it bounces up, at least I'm capping my extreme losses on the day, which was better than the 2.5 it was. So at a certain point, it's just, can I get lucky? Can I get lucky? It does feel as if a better risk would be 610, because they still might want to target 600 if I really had to guess. Oh, whoa. Okay, so there's a lot of support. Am I blocking this? Is my big head blocking this? A lot of buyers down here at 560, and then the point of control is 580. So I'm curious, is it going to get above and hold above these levels? But someone is really trying to buy a lot at 560. Like a lot at 560. VWAP is all the way up at 16. That is a lot of buyers. Part of me, I'm really, really torn on if maybe I move this too early, because I could keep one at 16. I can move them both to 16. So if I move them both to 16, one would be break even and the other one would be a 32 point hit. That's $600. I'm down $1,500. So that would put me down $2,100 on the day. All right. Well, if I'm going to do it, I need to decide quick. So the first one is still taking on risk. The second one is break even. I keep coming back to seeing where these people are positioned at. The point of control just popped up. You have all these people at 600 and you have that VWAP hit. They're not making it easy today, are they? Not making it fucking easy. Maybe I get protected by 600. What's nice about this structure is if this snaps here, I could move one to roughly that. But it's just on the south side of 600. I'm trying to be reasonable and like give it room to breathe where I'm not so tight that it's just going to get knocked anyway, but then not trying to trade like, oh, Matt, you got to get out. Like I'm just trying to, but P&L is P&L. Maybe sometimes you should trade your P&L. What is this high? All right, so I'm moving one down to 10. This high right here. So one is break even, riskless. I'm not pushing that one past it. The other one was an entry at 84.16. So that's taking on 24 points. So that's taking on 500 points of risk. And I guess, hey, the market's going to do what the market's going to do. My real goal is to get this other one to break even, which I could probably do on the snap of 66. Before, when I said I needed to snap 60, we just didn't quite get there. We got to 66. I guess if we take out 66, I can move the other one to 600. That would cut my overall risk to 300. As you can tell, I'm just in the mode of how can I reasonably lower my risk? If it vomits, great, I make money. But really the name of the game is how can I lower risk? The bots haven't fired in a bit, but thus far they've had a pretty good day of $450. All right, come on, take it out. Take it out. I have an alert set on the crack of this. $43. I think my break even is around 60. Like, I think if it gets here, I could actually like just be break even on the day. Should I? Maybe that's how I should do my math. Lock in one at break even. Yeah, it is roughly there. That's not the worst idea. Because like then it just cuts my loss in half and then the other one could be break even. And either I take an $800 loss or it just keeps going past that level and then I make money. That's like another way to think about it. Is dump one at the account break even, move the other ones to whatever the break even trade is. So basically, to put numbers to it, I'm currently short two at 600. I'm thinking about maybe locking in one at 60, putting the other stop at 600 flat. And if it goes, it goes. And awesome, because if it's below 60, I'm green on the day. And then if I'm wrong, I'm only down 800 on the day, which is on my account sizes, an acceptable thing to handle. That's basically like a unit loss. Another way you could do it is just be absurdly aggressive with the first one. And I could just move it to break even right now and basically say, nope, you're not allowed to come above it. And if it does, that's knocked out. But then I still have the other one, which is fully protected, like all the way up here. So yeah, if the market turns, it could still knock me. But that's another way to think about it. Oh, my life would just be easier if we sweep 60. Just sweep 60. All right, let's see if we could get an idea of what might be going on. 5-minute pumped up, got rejected. 10-minute pumped up, got rejected. 30-minute pumped up, got rejected. 5-minute pumped up, rejected. 10-minute pumped up, rejected. 30-minute overshot and got smacked. Let's move some of these alerts. SPY, puked, bounce, crazy V-shaped thing. We're now settling exactly where we settled earlier today. Same thing with the Qs. We puked, bounce, came back down right where we were already settling on the day. Right, let me go to the 5-minute on everything. It might be a little bit more lucid. I don't know what those arrows were necessarily for. I'll just mark out the intraday low, which we haven't broken IB yet. We haven't broken the high or the low for the first hour, obviously. Okay, flow, SPY is favoring the bears. That is definitely trending down. The Mag 7 is also favoring the bears. That's trending down. 5-minute. Oh, literally as I say that, a pump comes in. Son of a bitch. Oh, what do I need? What is this low? 66. Oh, is it because of those? Yeah, they're still there. I completely forgot about this player, but there's this wall of 300. Someone's trying to buy it right here at 560. And for right now, that's offering support on the NASDAQ. That's a chunk, man. That's why it's so deeply red. Once again, these are sitting buy orders. If they might get filled, they might not get filled. They could get, the position could get added to the orders. They could also get pulled. All I could tell you is currently right now in real time, there's a sitting buy order to buy 370 NQ contracts, which is clearly of note. That's why it's not just red, it's deeply red. And I'm curious, is it going to bounce right off or are they going to slam him? They slammed that guy just now. Oh, and it's starting to bounce. Isn't that crazy to see in real time? Like, why that level? Why the bounce? So someone bought 370 fucking contracts. That's why. I was break even for a very, very quick second. If I was thinking a little bit more rapidly today, I probably should have joined that guy and dumped one of them. Just, who knows, it might vomit, but just on the 50% chance it doesn't, I could have gotten rid of half my loss on the day. And your boy's back in the green. All right, cool. Now I am officially in the money. So the closer one, the first trade, that one's now at break even. The second trade's in the money by 16 points. So no matter what, I'm digging myself out of the hole. The question is just how much out of the hole. So once again, very first trade, stop is at break even. Second trade is in the money, up 16 points, $300. So my worst loss really on the day should be somewhere like, I don't know, $12.50. And that's if this were just to bounce right now and just rip out both. So somewhat getting where I should be. Dude, part of me, I'm really tempted to
order submitted.
I feel like I've talked about it enough, and sometimes when I start droning on about the same thing, it tells me that I know what I should be doing, and like for some reason, I'm just trying to like actually not do it. So I'm throwing in a buy order on a slight overshoot. We hit 53, 80. That's $600. So then I'm only down 900. So it'll be a locked in loss of 900, but then I'll have the runner from 16. Okay. I feel like for me, when I start talking about, man, maybe I should do this, probably should be doing
order
that.
filled.
So right there. Cool.
Order canceled.
Locked in loss is 900, and I have a runner worth 1,400. Sick. Boom. Management. Management. Welcome to Matt's risk management lessons. And if I wanted to, 40 points, 16, I think 75-ish. 75 is roughly my account break even now. Maybe 73, somewhere in here. So I could just move my stop to that level and basically say either I'm break even on the accounts on the day or I'm making money. But I could do that. That's not the craziest thing because I'm down 900. So that's 45 points, 571. I mean, this high right here is basically my break even. Technically, that's 72. So I could just say fuck it and go right to 70. All right. Accounts either break even on the day. I'm either getting out of this $900 hole in the worst case scenario, or it runs. Oh, wait, I'm already up Fuck this, dude. I'm done.
Order filled.
Dude, fuck this bullshit. Your boy made 1.1K after being down 2.5. I'm not playing this fucking game. It's Thirsty Thursday. Fuck this shit. I'm done. I see 15K. I see the bots rocking it. Fuck that. I'm not playing your silly game. Not today, Satan. Not today. Fuck, dude, did I bottom ticket? Imagine that. My bullshit reason for getting out is actually the bottom tick of the day. No, I saw it flashing $1,000 net. I'm not playing this game. Fuck this. Especially today is the day I can request from Apex again. Like today is literally the day. So like from swinging down 2.5 to being up 1.1, dude, it's just, is it worth it really? Like, am I still really gonna? The question is, okay, here. If it vomits another 50 points, I could be up 2K per account. Instead of being up 15K today, I could be up 30. That's possible. You know what else is possible is it could pop to 71, knock me out for break even, and I just did all of this for then nothing. Like, whatever. Honestly, it's actually probably statistically more likely that it does keep going. I probably did the statistically wrong decision because there's a very good chance that they are targeting this 20 level right here. I don't know, man. Not for me. And actually, Piper just fired. Piper pickled peppers. Piper. Here we go. What is today? Yeah, I'm fucking done. It's just like, I don't know, man. My back hurts from the gym. I just have other things in life that I should probably care about. Hang on, I am tossing up Piper for everyone in the Discord. It is the 4th, right? They say it is. All right. If you're in the Discord, it's up. It's there. Get that payout. I'm trying to, man. I'm trying to, before the end of the year, get another $90,000 in payouts from Apex before Santa Claus comes. Maybe technically right after Santa Claus. Maybe technically right after. Oh, options. What do I need to do here? Flow is getting, what time is it? It's 11:08. 11:08. All right. If you're in the Discord, I'm trying to get an order in here, but it's not getting filled. Oh, just got filled. Oh, huh? Okay, now it just got filled. Hang on a hot second. Just got mine. If you are in the Discord, I'm working as quickly as I can to get it in there. Okay, so I did that. You got bots. Let them rock and take a human break. Speaking of bots, why the fuck have these should have been trading? I am pretty certain it should have taken this breakdown at 11. Oh, wait, do the bots turn off at 11? Is that why? Because that was technically just past 11. I'm afraid to untoggle it. Fuck. Nope, it goes till 4. I don't know why they're not trading. Some questions remain a mystery to all of us, you know? But I don't know why that didn't trade. Oh, that was 11. Yeah. I'm pretty sure it should have taken this breakdown bar. So either here or here, it should have gotten in on one of these two bars because we swept all these lows. It's trending down. Rejected. I don't know why it didn't. I don't know why it did. Damn, that was a pretty good exit.
Order submitted.
Oh, speak of
Target
the devil.
filled.
Speak of the gosh darn devil.
Target filled.
Hell yeah, brother. 500, you know. Sometimes I just wonder if I will stuff into existence. Sometimes I just wonder, like, golly gee. Golly gee. Just fucking speak of the god. Dude, why is it so late every single fucking bar? It's a bar off. Something's wrong. It should be. I swear, I really think this is trading off by a bar. Something's not right. But it's only to the short side. I wonder if I fucked up the code for the short side. There's a good chance of it. Whatever, made $500. I'm almost thinking about turning everything off today and enjoying my Thursday. Anyway, before I let you guys go, look for the bounce off of 20. Shout out to today's stream partner, Bookmap. Bookmap is pinned to the top of chat. It's in the description of the video. It's the tool you see on the screen right now where I'm like, hey, there's a good shot we bounced there. And then we see the bounce and the break and all that. To see all the sitting buy orders right now, I just want to let you know there's a lot of people trying to buy at 520 and even more trying to buy at 510. This is called Bookmap. It's pinned to the top of chat. It's in the description of the video if you want whatever the best Cyber Monday deal is. And then also in terms of trading, if you want to trade with someone else's capital, right now you have Take Profit Trader running the best deal. So check that out. Use the code Goonie. I know Apex, I think, announced another one this morning, so you might want to check that out. Same thing, code Goonie. Tradeify announced one yesterday. Basically, on all these SIMDA-funded firms, if you're like worried that you're not getting the best deal, if you put in that code Goonie, it's the same code across the board. You should then be getting the best one. So just want to let you know about that for whatever you plan on doing for the rest of the day. Later on today, we will be posting an update video. Tomorrow will be Payday Friday. I'm trying to think of anything other major. There's no real big earnings. Tomorrow morning, we have the PCE inflation report. I think that's it. If you're playing fantasy football, don't forget to set up your roster, your lineup. That's going to get rocking today. And other than that, I'm going to go hang out with my cat. So I appreciate all the good vibes. I hope you made a fuckload of money. And if you didn't, well, hey, I hope you do with the remainder of the day. As always, it comes down to your risk management. This magical, mythical idea of someone creating a pattern and trading and trading and trading and making all this money on every single trade, it doesn't exist. The best traders in the world are the best risk managers in the world. That's why I spent 99% of my active trading today talking about how can I manage the risk, how can I manage the risk. And when I felt that I did it poorly, I was trying to point out that's where it went awry. That's what you do. The profits will take care of themselves. Your job as the trader is to be the best risk manager you can. Stick to your plan. Don't oversize. And when you're wrong, just admit you're wrong, because you're going to be wrong about 50% of the time. That's okay. You can still make a lot of money being wrong half the time. That's what I have for you. I appreciate all the good vibes. I'll catch you guys later. Have a good one. Peace.